Exchange-traded funds, ETFs, are a popular investment choice, offering a simple way to gain exposure to a broad range of assets. With low fees, easy trading, and the ability to track various indices or sectors, ETFs provide a cost-effective way to diversify a portfolio. Here are some of the best ETFs to consider for long-term growth. But before starting the video, be sure to smash the like button and subscribe so you never miss out on our upcoming videos. Number 1. Vanguard S&P 500 ETF, VOO. The Vanguard S&P 500 ETF is a highly popular and cost-effective way to invest in the largest U.S. companies. With $588.2 billion in assets under management, AUM, and an exceptionally low expense ratio of just 0.03%, VOO tracks the performance of the S&P 500 index, which includes 500 of the top companies across various sectors like technology, healthcare, and financials. These companies represent about 80% of the total U.S. stock market value, providing broad diversification that reduces individual stock risk. VOO is particularly appealing for long-term investors who want stable exposure to the U.S. economy's large-cap stocks. The ETF's low fees make it an attractive option for those seeking minimal costs and long-term growth. With its broad diversification and historical market performance, VOO is often considered a core holding in a portfolio. This ETF's liquidity also ensures it's easy to buy and sell, making it an excellent choice for both novice and experienced investors looking for reliable market returns. Number 2. Invesco QQQ Trust, QQQ. The Invesco QQQ Trust, QQQ, offers investors exposure to 100 of the largest non-financial companies listed on the Nasdaq Stock Exchange. With $313.8 billion in assets under management, AUM, and an expense ratio of 0.20%, QQQ tracks the Nasdaq 100 index, which includes major players in technology like Apple, Amazon, and Microsoft. This ETF is well suited for those looking to invest in the high-growth, innovation-driven technology sector. Although its expense ratio is slightly higher than others, QQQ provides investors with the opportunity to benefit from the rapid growth of the tech industry. With exposure to leading companies at the forefront of sectors like artificial intelligence, cloud computing, and e-commerce, QQQ has historically outperformed other indices. This makes it an ideal choice for growth-oriented investors who are willing to accept higher volatility in exchange for potential long-term rewards. By focusing on innovation, QQQ offers a unique way to tap into the future of technology-driven market growth. Number 3. Vanguard Growth ETF, VUG. The Vanguard Growth ETF, VUG, offers a cost-effective way to gain exposure to large-cap U.S. growth stocks. With $153.1 billion in assets under management, AUM, and a low expense ratio of 0.04%, VUG focuses on companies that are expected to outperform the broader market in terms of growth. The ETF primarily invests in sectors like technology, consumer discretionary, and healthcare, with major holdings including Apple, Microsoft, and Amazon. These companies reinvest earnings into innovation and expansion, supporting their long-term growth potential. VUG is ideal for long-term investors looking to capitalize on the growth of established companies poised for continued success. Its low expense ratio and broad diversification make it an attractive choice for those seeking to invest in high-growth sectors with the potential for strong returns over time. Number 4. iShares Core S&P Small Cap ETF IJR. The iShares Core S&P Small Cap ETF offers investors exposure to small cap U.S. stocks, tracking the S&P Small Cap 600 index. With $94.5 billion in assets under management, AUM, and an expense ratio of just 0.06%, IJR provides an affordable way to invest in the small cap sector. Small cap stocks tend to offer higher growth potential compared to large cap stocks, though they also come with increased volatility. This makes IJR an ideal choice for investors with a higher risk tolerance who are looking for the potential of outsized returns. IJR is well diversified, holding companies across various sectors such as industrials, healthcare, and technology. These small-cap companies often have significant room to grow, as they are typically in the early stages of their business cycle. By investing in IJR, investors are exposed to a wide array of small-cap stocks, reducing the risk associated with investing in individual companies. Small-cap stocks can be more volatile, but they also have the potential for high returns, particularly when the economy is in a growth phase. For long-term investors looking to take advantage of small-cap growth, IJR offers an easy way to access this segment of the market. Its low expense ratio ensures that investors can maximize their returns while benefiting from diversification across hundreds of smaller companies. Number 5. iShares Core Dividend Growth ETF DGRO. The iShares Core Dividend Growth ETF offers a compelling option for income-seeking investors, with a focus on U.S. stocks that have a track record of dividend growth. With assets under management, AUM, of $31.3 billion and an expense ratio of 0.08%, DGRO provides a cost-effective way to invest in dividend-paying stocks. The ETF targets companies that consistently increase their dividend payouts, which can provide investors with a steady stream of income while also offering the potential for capital appreciation. DGRO invests in companies across various sectors, with a significant portion of its holdings in industries such as consumer goods, utilities, and healthcare, sectors known for stability and reliable dividends. Many of the ETF's holdings are blue-chip companies with strong financials, such as Johnson & Johnson, Procter & Gamble, and Coca-Cola. These companies tend to perform well during periods of economic uncertainty, as they have resilient business models and a history of returning value to shareholders through dividends. DGRO is ideal for long-term investors who want to generate income through dividends while also benefiting from the potential for capital appreciation. Its focus on dividend growth provides a balanced investment approach, combining income with long-term growth potential. Number 6. Vanguard Total Stock Market ETF, VTI. The Vanguard Total Stock Market ETF offers investors comprehensive exposure to the U.S. stock market. With $468.3 billion in assets under management and a very low expense ratio of just 0.03%, it tracks the CRSP U.S. Total Market Index. VTI holds around 3,600 stocks, ranging from large-cap to small-cap companies across various sectors like technology, healthcare, finance, and energy. This broad diversification provides a balanced approach to investing, reducing the risk associated with individual stocks while maximizing growth potential across the entire U.S. market. Its low fees and wide range of holdings make it a great option for long-term investors looking to gain exposure to the full scope of U.S. equities. For those seeking a one-stop investment solution that covers the breadth of the U.S. stock market, VTI remains one of the most efficient and cost-effective ETFs available. It is ideal for both beginner investors looking for simplicity and experienced investors seeking a diversified core holding. Number 7. iShares Core MSCI Total International Stock ETF, IXIS. The iShares Core MSCI Total International Stock ETF provides investors with a cost-effective way to diversify internationally, holding over 4,300 stocks from around the globe. With $37.5 billion in assets under management and a low expense ratio of just 0.07%, IXIS tracks the MSCI ACWI ex-USA IMI Index, which includes both developed and emerging markets. The ETF offers exposure to stocks in regions such as Europe, Asia, Latin America, and the Middle East, covering various sectors including technology, healthcare, finance, and consumer goods. By investing in IXIS, investors can reduce their reliance on the U.S. market and capitalize on global economic growth. This ETF is particularly appealing for those looking to balance their portfolio with international exposure, offering a low-cost way to tap into the potential of overseas markets. IXIS is an attractive choice for long-term investors who want to diversify their holdings globally while keeping expenses low. ETFs offer a cost-effective and diversified investment strategy making them ideal for both long-term growth and stability. By selecting the right ETFs, investors can tap into a wide range of market opportunities. Thank you guys for watching. If you want more videos like this, make sure to like the video and hit subscribe button, and we'll see you in the next video.